What is going on, Outliers? Happy, what is this? Happy wait, is today Tuesday? I don't even know what today is. Happy Tuesday. You guys, what's going on? Good to see everybody. Kind of a last minute choice to pop on a YouTube live, but figured we could take a poke through the market together and then hopefully hit any specific questions or anything else that you would like to take a look at. So we started pretty much right on the buzzer, and that's because your boy needed to go grab some ibuprofen because we are still in the healing phase, which includes no shortage of leg pain. It's really fun. Great time. Highly recommend it. But we're here. I guess that's what really matters. So I'm actually going to try to sit. We'll see how long this goes for. The sitting thing tends to hurt pretty bad. All right. Feels like we're doing all right. What's going on? How's everybody? I'm going to grab this chat so I can say hello, see what you guys have going on. I see Elong Songs, which is code name for Liz, I've learned. See Joey, Eric. What up, Eric? Great name, by the way. Chris with a K. That's always a good choice, I suppose. Josh says, would be interested in hearing your analysis of Chewy. It appears Kitty is still holding his position in Chewy, and it would seem like he won't be piling back into GME until his Chewy position plays out. Yeah, we can take a look at that. We got Benoit Balls. Joey says, how's the cupping? It's essentially fully healed now. Part of me actually thinks that's part of the reason what made this whole thing so bad is I obviously had the herniated disc before I went into physical therapy that day, but I've never had this kind of issue before with the disc. My guess is it's probably been herniated for a while. I was actually reading a bunch of science about it because I tend to do that when stuff like this happens. And apparently, like, even for people that are between 20 and 30, like 30% of people between 20 and 30 will have a bulging disc. And then between 30 and 40 is like 40% and so on. So it's a pretty significant amount of people that have bulging or herniated discs of varying severities. But for the vast majority of people, they remain asymptomatic, which is what I'm assuming I was before I went to physical therapy that day, did that cupping. And I think that kicked off a lot of this stuff. So yeah, fun fact for you guys. Also, fun fact, I just got this, which I'm really stoked about. It's kind of blocked out. There you go. I guess you could kind of, hold on. There you go. You can see that. Check that out. So because if you didn't know, when you get into the video making / YouTube business, you apparently go through all of the potential storage on all of your devices all simultaneously. So got that to get plussed up. Aviator Geek says back pain. Welcome to being older. The cool part actually is that I have zero back pain still. It's all sciatica. It's all the leg. So I have this really cool strip down my calf that's currently numb. It's kind of fun, actually, the fact that it's like numb, not numb, then numb. Really good time down there. But yeah, fun fact, even as I get older, I still have no back pain, but I do have no shortage of sciatic pain. So I don't know, take your pick. At least I got a leg to feel pain in, which is kind of cool. All right. Who else we got? We got Big Ace, Cedric. Barry Boss says, I think it's C6 that gets me into the pinky fingers. Oh, that's an interesting one. Pinky fingers is really weird. I don't know if I would like that or what I have. Because for me, the leg is kind of annoying, but like it's in my calf. You don't really need to feel your calf. It's just kind of there. Hilarious. Rudy says, where do you see your real estate go? Where do you see your real estate going, up or down? I'm buying a property out of California, small to get my feet wet. What are your thoughts? Paulo, where are you looking to do it, by the way? I feel like a lot of that depends on the type of real estate and where it is. So I would, yeah, I mean, I'd love to talk about that with you, dude. For those that don't know, our boy Rudy, he is our friend Paulo, who's in my car club. But yeah, happy to take a look, man. Just let me know what you're looking at. I would just want to know where it is, what kind of property, like that kind of stuff, and what you're planning on doing with it. So for Josh's question, let's start with that. We can start with looking at Chewy since we don't really have any sort of significant agenda. We can kind of bounce around whatever you guys want to take a look at. So let's take a look at Chewy. And the question there, it says, it appears Kitty is still holding his position, which I think is accurate, at least as far as we can tell. And it would seem like he won't be piling back into GME until his Chewy position plays out. I don't disagree with that. Well, until whatever he does in Chewy. I'm not obviously fully read in on what the broader plan is for him or what he's necessarily trying to do. But I absolutely do agree that the broader evidence that I can come up with is that he's still in the Chewy position. Like, that's just my best guess. And the reason why I say that is because even with the recent share exchange, you know, people are saying, well, he could have, you know, sold some of his shares in Chewy and still maintained a position, which is completely true. Because I think somebody was quoting, I didn't fact check it, but I think somebody was quoting that his position would have grown to like 7.7% of Chewy, if I'm not mistaken, after like the last share transaction, which again, that fully checks out. Like, that doesn't sound squirrely to me whatsoever. But the broader component, though, that I would need to understand is if he still is in the position, he still has the lion's share of his money there. And from what I understand regarding the 13G is that he would owe an amended 13G within 10 days from the transaction that changes the float of his position. So yeah, I think that he still very, very likely maintains that position. And what he's looking for, I don't actually know, which is it's an interesting question, because actually let's grab his 13G. We'll take a look together because I'm actually kind of curious myself. So let me see. Prasad says, what a coincidence. I'm doing cupping now as I'm watching this live. Cupping helps me when my lower back is stiff from backyard work. Yeah, I love cupping. I literally have a set here and my wife does it for me. So we've gotten really, really good at it. I don't know what it was with that physical therapy appointment, but you guys also saw, I think I showed most of you guys the bruise that created, which is like, I've never had cupping bruises like that before. So it kind of tells me a few things went awry. The cups probably went on way too hard, which again, I don't help with that because I don't like being a little punk about things. So I'll typically take that to a little bit of an extreme. But then we also did like stiff leg deadlifts with the cupping on that tight. So obviously as you're bending over, that skin is stretching, becoming more taut. So it obviously pulls into that cup more. So I think a lot of that probably is a pretty significant component of what's going on. But yeah, overall, I think cupping is good. I just think the one that we did on the hamstring is probably what keyed off essentially everything that's going on, because there was nothing else that I did during that physical therapy appointment that would have done this, I think. And moreover than that, like I've told you guys a bunch of times, like I feel zero pain in my back. My back doesn't hurt quite literally at all, but I do feel a ton of pain in the sciatica, specifically in my thigh, or my hamstring, where that was. So I don't think that that's a giant coincidence personally, because I still feel completely stable in my back. Like when I pick up weight, I feel okay. Yeah, it's super weird. Anyways, this is not about that. I don't want to make it about that for you guys. The only reason why I even bother sharing this shit is just try to share information, right? Like typically very specific to trading, but also just in general. So let's take a look at Keith Gill's 13G. Keith Gill 13G. And this is the correct one. Yeah, okay. I'm actually just going to add this to my bookmark list because I look at this or pull it up, reference it quite often enough. Damn it. I'm still not used to not putting things on this side of the screen. I have to get used to fitting it on this side because I have a new home now and I like my new home, but I have to get used to my new home on the left side of the screen as compared to the right. Okay. So looking at the 13G, he hit 13D1C. He did remind us that he is not a cat. Important. He's not a cat. Don't forget it, please. And we can see that when it was filed, 24 June. And again, remember, this is the date of the event that requires the filing. Date of the event that requires the filing. So that tells us that on this day is when he exceeded the share limit that he has to file this 13G. Does that mean that he wasn't building into the position ahead of this and stuff like that? Don't really know. Really don't know. But if we take a look at Chewy and we go to 24 June, which is right here, we notice a few things. But the very first thing I notice on 24 June, if I kind of blow this up for you a little bit more so it becomes even more apparent, is that it had pretty massive buy volume, right? It was definitely above average buy volume. It looks like it got hit again a little bit earlier on the 18th, probably by some other entity or some other person. But here on the 24th, it had 18 million shares on the buy side, and it had 5 million shares on the sell side. So he literally could have entered essentially that entire position on the 24th. Like, that's completely reasonable. So that would put, again, using the midpoint, it would put him closer to like 26. I think conservatively, most of us are using like 24 and change as whatever the, damn it, did it again. Whatever the value of the position would be. But we're postulating that it's probably, 27. Did I say 26? Did not mean 26 if I said that. I meant 27. So like 2786 or 2780, somewhere around there, I think is what we're looking at potentially is like the entry price. So let's connect some dots here. If we grab his last YOLO update from here, grab this for you guys. Oh, damn it. I'm moving stuff all over the place that shouldn't be moved. Really messing this all up, you guys. Right, there we go. Okay. Now if we get a little side by side, I know I'm in the way of this one, but that's okay. We just need the last one. Brenegade says you need your tinfoil hat. Not yet. So the tinfoil hat is for very specific circumstances where I feel that I am massively speculating or taking giant leaps. And I actually don't think I'm doing that here. I think what I'm doing here so far, at least until we need the tinfoil hat, is quite literally just looking through the data as it sits and then arriving at the most objective conclusion as possible. So I do have Brenegade, the tinfoil hat, ready to rock and roll as soon as we need it. It's literally right there. And your boy can get there quick, fast, and in a hurry, even with the whole leg thing going on. We're doing all right. So as soon as we need it, it'll be here. But I don't think we need it yet. I think because what I want to do is just take a look at this position. So total value of the portfolio here, $268.4 million. Again, I've said it enough now where I've become slightly desensitized to it, but I always have to call it out. The fact that I'm talking about a single person's position in a single stock is freaking crazy. That we're just like, no, my boy has $250 million just kind of here, whatever, bro. So this was in June 13th. So this would indicate that between June 14th and 24th, he went through and very likely unwound the vast majority, if not all of this position, and then procured this new position. Now, I know that bothers a lot of people. I think people have become a little more, at least like accepting of it. I think everybody in the beginning, even Newton, when I was talking to him once, he was just like, well, maybe he traded options to make enough money to then buy the shares. And again, I don't know definitively that didn't happen, but it would have required essentially owning the entire options chain in GME the entire time and executing perfectly the entire time. So yeah, I'm not so sure that would have been very likely the case. So now though, if we go back to June 24th, we say that his price again 2780, let's actually double check really quick, most likely where we think that is. So here on the 24th, let's give it to him at like 2570 or 26. 26 is still fair. That's towards the tail of the day. I'll give it to him at 26. So let's say that he gets his 9,001,000 shares at 26. 9,001,000 shares at 26. It's 234 million bucks. So because of that, it would essentially require of the overwhelming majority of this position. He still absolutely could have an existing GME position. Renegade says, I still think he's holding GME and had money in a different account to buy Chewy. I know he said only positions, but I think that could be taken different ways. Maybe, man. I struggle with it because maybe. It's the reason why I say that is because I just find it so hard to believe that he would have $268 million in this account and then just another $250 million in another account. I know he's been crushing it, obviously. And I know he's made a lot of money, obviously. But if he's willing to put $268 million in this account, why wouldn't he, from the jump, have put $350 million to put $400 million? I wouldn't run it past him at all. And I don't think that he is super incentivized to dip into whatever money he's probably setting aside very logically for his family for this. He's probably not doing that because I'm pretty sure he has a daughter and I think he's married. I'm not positive. Again, I don't want to misspeak too far there. But I just think the probability of that. Yeah, no. Renegade says to match RC's first buy-in. I totally agree. I know that's why he did 9,001,000 here. Totally following that. And I think that's also why he did it with Chewy in Chewy, right? Like, I don't think any of that is a coincidence. I think there's a lot of fun communication going on between the two of them. But my broader point is I just think the argument that he had money in a different account and that he moved that over to buy Chewy, it could be. Again, I don't know. It could be the case, but I would find it very unlikely. Yeah, that's just my guess. It's just a straight up guess. But just because the way that he started with GameStop was very clear to me. Day Swag says, are you new here? We talked about this already. I'm not trying to be rude. Attaboy, Day Swag. Yeah, we obviously have talked about this quite a lot. I don't mind because it's kind of fun to take a look at it and, see if any new information has popped out, if any new opinions emerge or anything like that. Like, I'm always cool with that. So it doesn't bother me. But yeah, we've taken a pretty close look at the vast majority of this because it is so interesting. At least to me, it's fucking fascinating. But the way I look at it is when he came back, where are we? 2021 to 2024. So let's actually do some quick math. I haven't done this yet. I don't know if you guys have, but I'm curious. So this is 34,473. So 34,473. And let's just call it there. That's good enough. The rest of the numbers don't matter. I literally have to expand the cells because they're too big. And then he came back with 210,676. So 210,676. 1, 2, 3. So it's a 6,000% return. That comes out, let's see, that was over the course of 3 years. So equals is divided by. So he had a massive return but the return occurred again over 3 years. So what I'm trying to do is just get a sense of what he was doing in the meantime to generate that kind of money, which is a really, really big jump, but it's not like an insane jump. It's big. And let me take that back. It is insane, but in the context, right? Like the fact that we know that this is Roaring Kitty, we know the kind of stuff that he's been doing. So like this, it's so ridiculous to talk about this as if this is even remotely close to normal. It's not normal. Nothing about this is normal, but I'm not looking at this in utter disbelief, I should say, that he went from 34 mil to 210. Like that doesn't put me in utter disbelief. That is a realistic growth of capital over that time frame. Again, massive growth of capital, insane. But this isn't like jaw dropping. How did we go from 30 million to $1 billion? That would be like so many questions. This looks like super, super solid trading, right? Like that's what I see here. And exactly to Alfonso's point, it looks like there was a couple decent moves that he was able to capture in June and so on and so forth. So like this, it feels, again, just generally reasonable from a return perspective for somebody that's been doing a really great job, incredible trader, timing things well with the big account. Like compounding is a thing. Okay, so that part aside, when he comes back here, if he had another $200 million stashed away that he was expecting to put into a trade, my honest opinion would be he would have just had it here now. I don't think he would have rolled into this with $29 million in cash. I think he would have rolled into this with huge, larger positions here and even more cash. That's my guess. If he had another 200 milli just kind of parked somewhere in another account for a rainy day. Because I agree with the general idea that he probably has other accounts. I mean, they would just be smart. But I don't mean other accounts for trading. I mean other accounts to, again, take care of his wife, to have money for his daughter, to have money for them that I doubt he would pull out at this point to then put into Chewy or something else. So I get the argument. I think it's a fair argument. I don't think it's, out of bounds or crazy. But when I look at the broader picture here, I personally just assess that as a lower probability scenario. I think the higher probability scenario here is that he sold the bulk, if not all, of this GME position to then unlock the $230 million-ish it would take to fulfill this position. That's my guess. Don't know. And I will continue to remind you guys that I do not know, because I don't. I'm just trying to follow this through, not even logically, to be honest. I'm kind of applying a different kind of logic that I'm doing my best to view this from his perspective and his movements. Because again, like I've mentioned a few times, a lot of this it's genuinely, it's what makes it so weird is that it is just defying logic. So yeah, anyways, that's kind of what I see there. So going back to the original point for Renegade, I probably don't agree. And those are the reasons why. But I think your hypothesis is totally fair. Totally fair. And then I Buy You Sell says his old YouTube streams always showed a giant portfolio in a different broker. Yeah, well, I think that's for a few different reasons, right? And the way he traded, again, there was a really important clip. Maybe we'll dive a little further into this during our next GME live stream, which might be Thursday. If Newton is not feeling well for Saturday, I'll probably move the GME live stream to Thursday. Actually, no, that's a lie, because I have physical therapy Thursday. So it'll be Saturday no matter what. I lied to you. Now, going back to this, though, I think the other broker, you have to listen to what he talked about. I've listened to most of his old stuff now out of curiosity, again, just trying to develop the fingerprint that I have for him. And he talks about how he used to be a value investor looking for deep fucking value and stuff like that. But he talks about how he's changed. And this is before all of this stuff. And he was talking about how he felt that he would value things and then the market essentially wouldn't accommodate the value. The market wouldn't go to the value. So that was kind of frustrating, it seemed like, for him. So that's my guess, is that what we saw before makes a ton of sense. It's what he had before. But then he talks about, again, on that live stream, that this is his only account with his only positions. So I believe him. I take him at face value. I don't know why he would lie about that. And I think he's being genuine. So when he said, this is my only account, these are my only positions, I just take him at face value. Now, I do think that, like, what's the probability that he has like a retirement account with somebody else from when he was working? I think he was like in, I don't think it was financial services technically. I think he was in like insurance, but within the broader financial services picture, because I know he's seriesed. So like there's a really good chance he has a 401k from them. So obviously he's not talking about that because he's probably not trading it, and he also can't move money in and out of it without penalty. So like the reality that's probably there, sure. Like I would expect that to be there. Aviator Geek says, no doubt Roth IRA. Yeah, he probably has at least one IRA, if not two. So yeah, I think that's very much likely, but in the context of what he was saying, that's why I believe what I believe, at least in terms of the hypothesis I have. And again, it's not really like Eric's personal opinion. It is my opinion, to be clear. It's not fact. But what I'm doing is that's just the conclusion after I look at the series of facts and try to come up with an objective analysis as best I can. Jeffrey Jones. Yo, what up, Jeffrey? Good to see you. Renegade says, could you take another look at the Siri chart? Yeah, let's take a look, man. Also, thank you very much for the $1.99. Really appreciate it. Thank you for the donation. That will go towards, probably going to do Mexican food tonight. So that'll go towards whatever they charge me to add Chipotle to my burrito, which is super disrespectful. I don't know why they charge so much for that. So that's Chewy again. That's not Siri. Messed that up. Talk to me. What do we want to look at? Stocks or Poker says, are you legally allowed to put not a cat on an SEC filing? I really have no idea. To be honest, I was shocked that this, not that this was on here, like this could have gone on, like he could have edited this on afterwards, right? That's super easy to do. But I was really, really surprised that I didn't look personally, but what I heard is that this is from Chewy's investors relations page, which is hilarious. I think that's crazy that they had that. That's hilarious. Dr. Zay says, yes, it's legal. Rather, there's nothing against it. I mean, that's kind of surprising, right? So, well, I don't even know the rules, to be honest. So I'm not even going to bother going down that rabbit hole. But yeah, I think it's hilarious that that's on there. Okay, so back to Brenegade. Brenegade was saying, I was thinking, he was responding to somebody else. Let me catch up here. Renegade says, Series moved some very flat price action lately after a lot of volatility a couple weeks ago. Yeah, definitely. It looks like it's consolidating here. I don't really know what kicked all this off. I don't remember exactly what happened here. So we can find out. So what I'll do is I'll grab good old-fashioned ChatGPT and I'll say, look up news related to Siri stock on, what is this? 2 and 3 July. 2 and 3 July. And let's see. Let's see what it is, though. Brenegade says also the Siri merger with Liberty. Yeah, we talked about that during yesterday's live stream, so I'm not going to go into that. You can check that out. Long story short, we already know. The merger's been announced literally in December of 2023. So there's absolutely no new news there. Okay, so on the 2nd, Siri's announced that it would release its second quarter fiscal results on 1 Aug, and that it included details about an investor call scheduled for the same day. Okay, so that makes a ton of sense. The anticipation might have influence in sentiment. Yep, that makes sense. And then, yeah, okay, so that completely explains this move here. So this had everything to do with announcing the earnings and then the investor call scheduled there. So easy explanation. So yeah, I mean, as I see that, when, I mean, that looks normal to me. Then let's see what happened here. Bad earnings. That looks normal to me. Companies have earnings that people don't like. And then we've trended sideways from there. So, I mean, yeah, I'm not sure. We looked at the options yesterday. It doesn't look anything crazy to me. The options chain looks normal. Slight call skew. But yeah, I think the rest of the details about Syria, if you're interested, I would check out the stream from yesterday because we covered the majority of this. If there was something specific you wanted to look at, obviously I'm happy to. But yeah, most of the stuff so far to me just looks standard, kind of rote programming, unfortunately. All right. What else you guys got? What are we talking about here? Jeffrey says, how about the Tesla move for today? Is the bottom in? Let's see if that bottom is in. Let's see if she got a fat bottom. This looks like the freaking NASDAQ, bro. It's like the same chart. It's hilarious. If I grab Qs, just look for the most recent period. It's like the same thing that it's done. That is really, really interesting. So here's what I think about Tesla. The first thing is when I look at the broad market is not playing ball. So individual stocks that like this that are being propped up under their own volition is a very solo endeavor that they're going under. Now, when I look at Tesla, it experienced a similar drawdown starting from the 23rd based on its earnings, and then it followed the same broad market drawdown here. So I don't love that personally. From my perspective, when I'm looking for strength, I want to find things that as the market is coming down like this, that it's not moving as much. And there's different names that behaved so differently during this market drawdown. I think I talked about that a little bit in some of the newsletter when I was in Alaska, because I think it's so important to understand that. So when I look at this, I see something that's essentially behaving very similar to the NASDAQ. Now, with respect to the question of is the bottom in, I think it's in until the market turns. And it would not surprise me whatsoever if the market turned that Tesla continued to the downside, because it already showed its hand that it's moving in line with the Qs. So the way that I look at this personally is I would say the bottom is in as long as the market continues to accommodate. I think if the broader market starts to revert back down, I don't see anything in Tesla right now that would make it special to hold up like I was seeing in some of the other names. So, Jeffrey, let me know what you think if that answers the question just about whether or not the bottom is in. I know it's, as per usual, a bit of a non-answer, but it's a genuine one. I think trying to come up with like a call, yay or nay, is just so disingenuous, because the way that I look at markets, it's in the light of Bayesian statistics, right? Like I'm going to make the best possible assessment I can with the information that I have now at this point in time. And then as soon as I have more information, I'm going to update my assessment. There's no reason not to do that. A lot of people in trading, they get so stuck up with this idea of like, oh, you can't flip-flop your position, or you flip-flop your position. And it's just like, bitch, like this is not an ego contest. It's literally interacting with one of the most extremely diverse markets and systems that exists literally at all. And the idea that you're supposed to come up with like a guess and then just blatantly stick with it because you don't want to go back on a guess, it's absolutely ridiculous. Super, super silly. So yeah, not that anybody said any of that stuff. I just like to make that point because I think it's important for people, especially if you want to be in trading long-term, you got to drop the ego essentially immediately. Like ego has to go away. So if you feel like you make a call, a hypothesis, you should feel supremely convicted in that hypothesis until there's new information that challenges the hypothesis. Then you can drop that motherfucker like it's hot and move on to the next hypothesis. There's nothing wrong with that in trading. It's actually important to do, to be honest. So yeah, bit of a dovetail, but I think it's an important note for you guys. Josh says, I'm sorry if you already looked into Chewy. in another stream, but you see anything interesting long term? Yeah, I think we looked at Chewy a bit yesterday, both in the live stream and then in the video. So feel free to check that one out, Josh. Chris says, do you play news, CPI maybe, or just charts? Yeah, of course. I play news all the time. So I think that, CPI, PPI, like all of these different kinds of releases are very, very tradable. I traded 0 DTEs today, and I trade 0 DTEs most day. I didn't trade them specifically today because of the news that was coming out. Let me see if this is updated. The 11th to the, yeah, this is good. So yeah, when I looked at the news today coming out on PPI and CPI, both came in a little bit light, which I think is really, really important. But yeah, like I'll trade these, but I'll just trade it a little bit differently. Actually, in the Discord for the pro folks, I talked a little bit about, or I posted a little bit about what I did, and I'll talk to you guys now about it. So essentially, I had my 0 DTEs on, and I took them down for a partial profit at 11:43 Pacific time. And the reason why I did that is because the trade started to get a little bit off balance because the market was generally maintaining a solid one-way trend, right? So this is the one I typically use for 0 DTEs. If we take a look at essentially where it landed when I exited, because I took it down for a profit, it wasn't a losing trade, but my trade started to get really unbalanced. And it's because from when I got in, it was kind of just a one-sided drive up. Not a big drive, but enough that it starts skewing my deltas enough. It's a 0 DTE trade. So what I do is I take it off, and I took it off at a profit, and then I ended up re-entering one like a minute later. Just wanted to see if anything was changing in terms of volume, tenor across the other indices. Looked about same. So then I just put on another trade that rebalanced my deltas. And for the original trade that I put on, all I do is make sure that the position itself is sized appropriately, expecting a larger move. I tend to expect larger gaps in liquidity if there's a bad move. And I am really cautious about stops in managing the trades. It's one of the dangerous things in SPX is if you use stop market orders, you can get murdered with terrible fills. But if you don't use stop market orders and you use a stop limit order, you might not get filled when you really need to get filled. So in those instances, I tend to hover over the position. I watch it super carefully myself so that I can manually adjust it as needed. Because yeah, otherwise, I mean, shit, you can find yourself in a terrible, terrible spot trading something like SPX, 0 DTE. So yeah, I definitely trade news all the time. I trade earnings releases all the time, biotech, phase trial releases. News is such an easy trade. I mean, a recent one I think that I talked to you guys about was in the ratio put diagonal. Do you remember what stock I talked about in there? Was it CrowdStrike or was it something else? Oh no, it was O. It was O. So there was another video that I did that, or maybe it was just a live stream. I don't know. I make so much content. Like I really don't know what goes where at this point. It all just kind of goes out. But I traded this down move, and this was a completely news-driven trade. Another great news-driven trade is anytime you look at Boeing and somebody gets sucked out a fucking window, you can trade that. Sucks that they get sucked out a window. Don't want to see that necessarily. But yeah, I trade news all the time. It's a fantastic catalyst for short-term moves. Also, there's 69 concurrent viewers right now. Shout out to all 69, every single one of the 69 that are here currently. I couldn't imagine a better number of people other than 69 being on the Tuesday live stream. So, I mean, as long as we stay on 69, I think we're at 70. Damn it. All right, next. So, going back to this though, so like tomorrow, for example, if we take a look at CPI and PPI, I think these will probably, and the market is already expecting these based on interpreting values off of these. It's expecting these to come in similarly, in a similar fashion, probably a little bit light. So yeah, I think here the market is already pricing this in. Actually, we can take a look at how accurate Eric's sentiment is towards that. Let's grab some SPX. Take a look. Oh, no, not completely right, because the market is still quite elevated. So the market is still fairly pensive about this release tomorrow. I have to be honest, that's a little higher than I was expecting compared to like the 14 and 15 AUG vols. That's what I'm comparing right now. And let's take a quick look at the vol surface, because that is actually a little bit interesting to me. So let's do implied vol, and then let's just do this front series, these two series. Yeah, interesting. Yes, Queen. So the market definitely is adding quite a bit more vols downside tomorrow. That's probably people just broadly hedging a portfolio. It's not surprising to me, because you have to, at least for a lot of people that are using options in something like SPX, it, like you can see by the put skew, right? 14 million puts against 7 million calls. People are using this to just hedge broad portfolios. It's one of the like really slick ways you can trade super effectively. I used to do this a lot when I was trying to aggressively grow my portfolio, is I would pick individual names based on trying to trade momentum for like my speculative plays. But then you can just slap on a portfolio beta weighted hedge using something like SPX or SPY or whatever ticker is more appropriate to your size, that can really offset a lot of the risk in the position for not a ton of money on a relative basis. It's expensive to use puts to hedge, but if getting some expensive puts to hedge allows you to put on a much larger speculative position on the longs, it can easily pay for itself. So that's kind of what I'm seeing here, but this is just a little more elevated than I was expecting. I was expecting maybe like 2.5 or 3 points, but it's like just shy over that, because, well, I guess this is 23. My mind was looking at this as 22, which is super curious. So yeah, it's a little closer than I thought. Never mind. I think it's pretty close. Simple Moses is compared to Complex Moses. Says, you always provide awesome insight. Thank you, my man. My pleasure. I love markets. I love chatting about markets with you guys. This is the stuff that makes me super stoked. So I'm always happy to hang out with you. It honestly makes me stoked that there's 70 plus people coming to hang out with us and to take a look at this stuff. So yeah, my absolute pleasure. Dr. Zaya says, how can you be so sure that it's a hedge and not a genuine belief in a downside move? It's a great question. It's because you'll notice the overwhelming majority of instances, you'll see put skew in something like SPX. Now, why would that be the case? If I zoom this bad boy out to the max, why would I carry puts if it does this long term? And overpay for those puts, I should add. Makes no sense. Nobody would do it. So the reason why I know that this, and I do know, it's not even hypothesize. The reason why I know this is because of two reasons. The product itself is a really easy way to hedge a broader basket of S&P 500 stocks. Second, even when we're going through bull markets, sustained bull markets, you will still see put skew as compared to call skew. You will almost always see put skew in products, indice products like this. SPX, almost always. If you look at NDX, another index, we have to refresh it by doing that. You'll notice the same thing. Again, NDX is way less traded, but you can still see 104,000 puts to 66,000 calls. So yeah, that's exactly why you'll see that specifically in the indices. And the other fun fact, which is an even more interesting build off of that, Dr. Zayas, is the fact that these people are knowingly and willingly overpaying for the puts. We know that the puts are overpriced on a relative basis than the calls. We know this. And we also know that the market tends to imply higher IV than what we realize in IV, which also jacks price up a little bit. So that's an even more fun fact, is that they are willingly overpaying for the protection, but it's worth it. And there's a giant list of incentives from a portfolio management perspective that essentially makes this right here preferable otherwise. So yeah, it's a great question. I'm glad you asked it, because there's a lot of really interesting, subtle details to it, hopefully, that you now know. Renegade 56. Since Sirius XM is merging with Liberty and there's a large difference in stock price, how would you estimate the value of the new shares post-merger? Well, if it merges, the shares are gone. Again, not trying to be a dick, Renegade, but I really think you should watch the live stream from yesterday, because I talk about literally all of this. So the other thing that you have to remember is that the merger is not done yet. So some people have been talking about trying to find some sort of ARB opportunity, and I wouldn't talk about it in the context of the merger is done. It's not done. And the market is not pricing it as done yet. So yeah, just a couple other admin notes, but I would just highly recommend check out the live stream from yesterday, because we spent a while talking about Sirius XM. John Doe says, trading, you could have just spent 30 seconds commenting on my question. I guess no off-market questions, but why post the pic and don't take any questions? I always take questions and comments. It's just impossible for me to read every single one of them, bro. But if I miss one, feel free to always bring it back. Show me where to go. I always try to take a look at everybody's stuff. It's just impossible for me to catch every single one of them. I'm kind of like a chameleon, right? Like, I'm looking at my screen, I'm looking at the live chat, trying to see what's going on. I'm a one-man band, and I'm not even that smart. So it's not like I have a team that helped me catch up with the questions or keep track of them all. And my dog isn't even in here. Normally, he can help me out a little bit, but he's not even here. So yeah, I'm solo dolo, bro. John Doe says, is that a C7 and C8 in your garage? I've had both, great cars, traded for 22 Shelby Cobra. Oh, that's cool. Yeah. So I have the C7 in the garage, which is built, and then it's not a C8, it's a McLaren 570S. That's the other car. And then I have the truck, which is kind of like the daily, which is a Ford Raptor. But I have all sorts of kind of fun cars. I've been into cars the vast majority of my life. And then the question was, the Shelby Cobra, you ever drive one? I have. I don't really like the new Mustangs that much. They're cool, and I think as long as other people like them, then I love them for them. But yeah, it's just not my preference of car. Not a big fan. It's kind of like Porsches. I like Porsche. Porsche, cool brand, especially if you want to get a really solid performing car out of the box and not do much with it. But yeah, it's not my flavor either. That's kind of the cool part, about cars, is you get to find the stuff that you really like. But yeah, right now the C7's getting a bunch of work done. I have it up on the lift because it needs a few things done, but I'm essentially getting new suspension, so updating shock springs. Yeah, we'll have the vet out and about soon enough. Ryan says, just want to say I fucked up. Just wanted to say, missed the stream. Oh, I guess when I was gone. Hope your trip went well. Blessings. Thank you, Ryan. Great to see you as well. And we are back at the streams. So we're here and happy. Day Swag says, I'm like a Ford Fiesta kind of guy. There's nothing wrong with that. What I try to tell people when it comes to cars is, unless you are like a genuine gearhead and genuinely enjoy cars, then they're terrible money pits otherwise. I literally have spent tens of thousands of dollars on, even more per year, easy, on both of those cars. So it's like, they're terrible for money. They're literally abysmal for money. And a lot of people will get like a really nice car because they think other people will judge them better for them, or that they'll seem cool. And it's like the saddest, dumbest fucking thing I can imagine. If you like cars and they derive genuine value for you, like you derive personal value from the vehicles. The marginal utility is high. Of course, get them. Spend the money on the shit that you like. But if you're the kind of person that doesn't really care about cars, then don't get an expensive car. Get something that's reliable, that you like, but it doesn't have to be something that's super expensive or anything. Because unless I'm on the track or breaking every single law that exists, like when I'm on the highway, my car goes as fast as everybody else's. So yeah, it doesn't make a lot of sense. The doing it for like status and stuff like that is just such an empty thing to do. And I think once you get to a certain amount of money, that's the funny part, is like you'll find people with money that then they really don't care what other people think about them or how much money they have. And that's like really where true freedom starts to come from. So I would not care at all about what car I had. And for the longest time while I was building wealth, I had a Toyota Tacoma, completely great truck. Loved the truck. It's not like a flashy truck. It's just a standard ass truck. And I loved the thing. And I wouldn't really get into any sort of expensive car because I wanted like some sort of status symbol. I think it's such a waste. I think, again, like when I had enough money that it made sense for me to start playing a little bit more, splurging a little bit, I grabbed the Corvette, had that for a few years. Then I grabbed the McLaren, had that for a few years. And I do have to be honest with you, if I had a bigger garage, I would fill the garage out. So like when we move probably to Colorado, I'm already looking at places that either have probably at least a 6-car garage or space for like a second garage. But again, like the reason why, like I love cars, I grew up working on them. Like I enjoy them. I derive personal satisfaction from them. And it's why I get the cars that I get, right? It's one of the reasons why you don't see me in like a Lamborghini. And it's because so many people get those as just like a status symbol of some sort. And I think it's so lame. I don't even want to be associated with it. Although a lot of the Lamborghinis are just fantastically beautiful cars. It looks like the Batmobile. I love them. Big fan. But I like the things that I like, and that's the stuff that I'll buy. Because funny enough, I think I've told you guys this before, but if I pull this up, you see that painting? That's of my Corvette. My mother-in-law did that. But the reason why I wanted to get this white Corvette is because the very first car I ever worked on as a young kid, my uncle had a 64 Corvette Stingray that was white. Not a 64. But it's a white Stingray, right? So I got that car because there was a lot of nostalgia built into the brand and stuff for me. And then I built the car. So yeah, long kind of rabbit trail. But I think it's an important lesson for people to just sooner rather than later figure out what you value and do that. For me, I don't value things like nice clothes. I'm already ugly. So what the fuck? Like putting nice clothes on me is like putting a chandelier in a haunted house. Like who gives a shit? So I just wear stuff that's comfortable, right? Like I don't care. So for other people, they derive a lot of value from clothes or whatever. And if they genuinely derive value from it, cool. Derive your value from that. But I think the important thing is to like really, really think about marginal utility and what matters to you. Because here's the other thing that you'll find. As you build wealth and you have more money, you have more access to more shit. And you can spend more stuff. You can spend more money on just everything, right? So instead of having the Honda Accord that you like that gets you to point A, point B, you get the G-Wagon. Now you got to pay for the insurance, the upkeep of the G-Wagon. And then you also want to upgrade your box. No, not that box, your house. And you want to get into a bigger house because you now can afford a bigger house. So it's like you start spending on all these other things, and then you realize that as you have like more money and you start spending that money on more shit, then you need to make more money just to maintain the status quo now. So like that's one of the biggest faults I see with the American mindset, to be honest, is like our conditioning for consumerism. And it's so stupid. As soon as you travel a little bit I think it starts to break that down for you pretty meaningfully. Like when I was in Africa hanging out with the Maasai, I was chilling with these kids that were so stoked just to hang out with other people. And their shoes literally were made out of old tires. They cut them into sandals, and it's just a square or it's rectangle, and that's their shoe, and they're stoked with that. So the other point that I would highlight for you guys is that as your money grows, don't grow your habits correspondingly. As your money grows, your spending habits, your lifestyle absolutely can and should grow. But it should grow in the areas that matter to you. It should not grow just because your money is growing and you think it's the right thing to do to start spending your money on a bunch of other shit, because it's probably not. I still go to an EOS gym. I don't even know what I pay, maybe 10, 15 bucks and maybe 20. I don't know. But like, I don't go to some like boutique gym. Why? Because I don't care. I go to the gym to get a workout. It's close. It fits my needs. But there's other people out here that go to, I forgot the name of the gym. It's like the really, really nice one that's like several $100s. Forgot the name. The hell is that other gym? Equinox? Is that it? Anyways, like I don't go to some super expensive gym. So, but I do have 2 gym memberships because the other gym I go to is a really cool strongman gym. So again, like just spend on the things that matter to you and don't grow your spending habits linearly with your wealth generation as your wealth grows. Try to have a slightly curtailed lifestyle growth pattern as compared to your wealth. And then you'll find that your wealth will grow so much faster that way. And you can tolerate more shit when the market's down, when things aren't going well, when you have to step away, like whatever it is, you have much more flexibility when you do that. So yeah. Alfonso says, my neighbor's McLaren 720S was at the shop more than his garage, so he bought a Camry. Yeah, that's kind of interesting, like, because the McLarens actually have really good reliability. So he might have had a bad one or whatever the case was. In those instances, I would try to offload it too. But yeah, I mean, if you get an exotic car, you're not getting it for reliability. Like, you have to know that. And you're getting it because whatever reason you're getting it, but it's a completely different kind of car. It's an exotic car. You're not going to beat it to death, and it's not just going to automatically be happy. You have to take different kind of care of high performance machines. It's just like a high performance athlete. Other than Usain Bolt, who I think he talked about like eating like McDonald's chicken nuggets or something before he would run, which is hilarious. But other than him, like premier athletes, they don't just eat like shit and then show up and hope that they perform super well, right? That's not what they're doing. So yeah, it's kind of like the same thing with cars. Like if you have a performance car, you have a performance machine. It has a slightly different expectation of things, and rightfully so. Ryan says, any reason why Raptor over the TRX? Love them both. Yes, there's a very specific reason. It is because I don't even care about the mileage, how far you can go. I don't care. I mean, I do care. My bad. I don't care about the mileage that you go to get there. Again, like that is one of the fortunate things about having some level of wealth is I couldn't even tell you what I pay for gas. I don't know. But because it just doesn't matter. But what I do care is how often I have to fill up. So for example, one of the reasons why I love the Raptor is because it comes with a 36 gallon tank, and because it's an EcoBoost 6-cylinder, which I don't love the V6 in a truck, but I'm not towing a bunch of shit. It doesn't matter that much. But for that setup, I can go like 500 miles on a tank. So if we're going from here to like Las Vegas, I can go the whole way and not have to fill up, which I really, really like. So what I told myself is that for the TRX, because I test drove one, and as soon as they have one that has a larger total distance, I will 100% get it because I think they're sick. But the other thing is the Raptors themselves, like they've just been in the game too long. Like Ford has done such a great job building a super robust off-road truck. So they know the game really well, and they built a tremendous platform. So that's the primary reason. always down to talk about some cars, but let's get back to the markets. What other... Alfonso says Mikey Musumeci eats only pasta and pizza and it's a multi-team, but he makes it himself. And again, like there's nothing even inherently wrong with pasta and pizza. Carbs are fine. So yeah, I literally don't even see anything wrong with that from a diet perspective. If you're burning enough calories, like if you told me that the only thing he ate was like onion rings and soda, yeah, I would be like, what's going on here? But pasta and pizza, like actually is completely fine. And he also makes it himself. So, and he's also tiny. Like, let's also keep that a buck. He's not like a large imposing person. He's deadly in jiu-jitsu, no doubt, but he's not a big dude. So yeah. Respect to Mikey though. I respect the dude. What other questions do we have on the mark? Okay, so Dr. Zayas, that's the one I saw further up here. So Dr. Zayas says, okay, devil's advocate, let's say there was widespread belief in downside move. Would that puts you just explode even higher? Absolutely. And that's actually not even devil's advocate, to be honest. Like that's like a really educated question, Dr. Zayas. And that's a super, super reasonable question to ask. So that is exactly what you would see. So this is why it's kind of important. I call it fingerprinting, but it's kind of just like understanding the way, like the mark of something, how something looks and behaves. So for SPX, the fingerprint is it's always going to have put skew of some degree, but you can see different levels of put skew. So let's explore that together. So let's go back in time, and I want to look at two different periods. I'll figure out which ones we want to look at. Let's go back to 2015, February. And then let's go back to February of 2020. That's actually funny that lines up so perfectly. So here, let's go to 2015, I think I said that. And then let's go to February 2015. It doesn't really matter when. We'll just go to like the second. Yeah, that's fine. And then let's take a look at this. I want to see if this populates. If it does, it would make it a lot easier. If not, I can always take a look at it and then share it with you guys in the future because I have all the data. Okay. So in this case, we have 3.5 million calls against 7.2 million puts. So about 2 to 1 in this case. And this is when the market's going up. Now let's go to February 2020. We'll go towards the middle of the month. We have to go a little bit further. It looks like end of the month. Let's go a little less far to like the 24th. So big gap down here. And let's see what this looks like. So if you remember before, it was 2 to 1. I don't know why this says pre-buffering. It always bothers me. So now there's 4.9 million, call it 5, to 11.5 million. So we're now over 2 to 1, starting to expand. Let's go to the 25th. Big old fat red candle. Down day. Let's see what this is now. Hopefully you get the point already, though. So it didn't change that much. There was about another 500,000 call or puts added. So a little bit of building into the down move, but the call side didn't move that much. And now this is when people are trying to speculate on where the bottom is. And then as the bottom continues to not show up, people will continue to position. And part of the positioning will be done. See, like, take a look at this. Calls went from 5 to 5.3. Puts now are at 12.86. So now we're 2.25 times almost. So you can kind of see. The normal for a back of the napkin generalization for you guys is probably about 2-to-1 is what I would generally expect to see, give or take. I think 2-to-1 in general is about right. And then when things start getting heated up, you'll generally see puts expand a little bit. But the reason why you don't see them flying off the handle is because they're already on. Right? A lot of people already put the puts on. That's why they're there. So they're not necessarily hedging as they need to hedge because then it's generally too late. So the reason why you don't see the puts here like exploding to the upside on a relative basis is because most of the hedges are on. This has already been at 2-to-1 for some time with people favoring the downside. So it's a really great question, but that's exactly what that looks like. Ryan says, thoughts on CPI impacts? Yeah, so from the market perspective, it looks like it's, again, about what I would expect, a little steeper of a gap in this relationship. So like I said, I was expecting maybe like 2.5 to 3, but probably closer to like 2.5. And the vol for tomorrow is 25.88 versus, just changed, 25.81 to 22.96. So the vol here is still elevated, but not tremendously so. My guess is tomorrow, we're not going to see a ton come out from CPI. That's my guess. My guess is what we see tomorrow will probably fall in line largely with what we saw today. And my guess is the market is probably already priced a lot of that in. That's my assumption. So yeah. James says, can we go over the upcoming decreasing interest and its effect on longer term options? Would it serve as a tailwind, headwind for options? Yeah, it's a good question. So with the rate statement coming out, the way that rho, which is the impact of a change in rates on options, I don't even know if I have that in my options chain. Yeah, I don't bother having it in here. So rho kind of, it's not going to impact most of these is the way to look at it. And the market is already starting to price in the changes. So you'll already see some of those changes being integrated into the pricing because the market makers are pretty smart and they're going to price options as effectively as they can, encompassing changes in rates. So I think the overall impact on options probably is not like massively powerful. And the other thing to note is a change in rates for options in general is still a secondary factor, unless you're really trying to build a position that isolates rho, which is a completely different story. But if you're just trading normal options like buying calls, selling puts, or whatever it is, the primary profit factors on those is going to remain the same, which is going to generally be based off of delta. Now, you can experience, again, some changes in your options premium as rates move. But the other thing to note is like the rate movement is not that big. So they're talking about 25 to 50 basis points, which is generally insignificant still. It's something, but it's not a ton. So overall, I would generally offer that it's probably not a giant impact. Although it's a great question. Cool. Let me know what else you guys want to take a look at. In the meantime, I will take a look at some earnings really quick. So today there was Home Depot, HUT, SENU. So I had, wrong one, my bad. So Home Depot is on the table for me for an earnings play. And so far it looks essentially unchanged. Closed at 350. And after the report, it's 349, 350. So this looks like this will be completely fine. And then we also have New. And New looks okay too. So New right now, they came in at a 10 cents. They are estimated at 0.95. And they're at 1271 after the market trading like 13, 10, 14. So this will also be a pretty solid trade. This earnings release season has been insanely lucrative, probably one of the best that I've ever had. And then let's take a look at HUT. I didn't mean to add an N. And then HUT is also parked. So HUT lost 568, and they came in with a big loss. Why are they not crashing? I have to imagine that they had some good guidance. Revenue came in light. Interesting. So this one I'll probably have to watch tomorrow. It wouldn't surprise me to see this accelerate. But I mean, so far it looks completely fine, like shockingly fine, kind of alarmingly fine. I'm concerned because it looks too fine for that kind of giant. That's a big miss, man. They're expected to lose 9 cents and they lost 57 cents. It's a big miss. So unless there's a really, really good explanation for that, your boy might have a sloppy trade tomorrow. But HUT, I always size pretty conservatively because I know that she has a tendency to run. And then tomorrow we have CAH, was that Cardinal Health, I think? Yeah. So we'll see how this goes. So let's take a look at the rest of the week really quick. So tomorrow after the close, we have ASTS, Cisco, Riley, and Stone. Literally all of these look pretty good. So let me detach this so that I can just look at them on the chart as we click through. So actually I have to slide it here first, then go to the chart. I don't need it to be that blown up. Okay. So now tomorrow after the close, ASTS. Oh, damn it. I'm going to pin this so that it stays there. Okay, ASTS. So near highs. I don't really love that for this. Let's take a look at earnings. 1, 2, 3, 4. Mixed bag. Really big mixed bag on earnings. So what I'll do here is take a look at another data source. And I want to look at some of its averages. I want to see how it tends to behave. Let me see. So what I'm doing now is I want to get a sense of what the general expected moves are, the implied moves, and then what the general realized moves are. It's just overall good context to see what you're getting paid for. Oops. Yeah, so it looks, I mean, it looks okay. I'm not like in love with it. So the other thing I'm trying to analyze right now is the size of the moves and how it tends to behave. So you can see from some of what I was showing you in the earnings thing here is that the size of the moves aren't too bad. So the reason why I care about that is because like when it does beat or miss, I want to know about how bad. Like this was a pretty big move. It doubled. It went from 239 to 403. So it's a terrible move to get ran over on. Now, the convenient part about that is that it's still relatively small. So because it's a smaller product, even though that's a big move, if you size the trade well, it doesn't really matter that much. So this is the way I like, the way I would look at this is I would trade it with smaller sizing. is the way it looks like. So I'll see how this looks closer into the close, but we have to take a look at that. Let's take a look at Cisco. I mean, Cisco looks good. That's crazy. Like even on this gap, this $2 gap, still maintained IV. So that's probably on the table. Well, not probably, heavily on the table. And then Riley. Big A says, hopefully nobody had Riley. Why? What's wrong with Riley? Did something bad happen here? What am I missing? From an earnings perspective, it doesn't look very appealing. It doesn't look terrible, but it doesn't look good. So for Riley, the average implied move over the last 12 is 8.8 and the average actual is 10. So I don't like that. That would be a pass from me. And then Stone, last one. It looks okay. It doesn't look great, especially with these two. But this looks okay. This looks somewhat okay. Doesn't look great, but not bad. Let's see what this average move is. So for Stone, implied is 10.9, actual 14.8 for the last 12. Don't love that. So I would like, that's just a little too much of a non-favorable skew, in my opinion. So probably we'll pass on this. We're essentially getting to the tail end of earnings. So I become a little more selective here and I'm not putting on quite as many things. Ryan says, Eric, do you prefer ahead or wait for them and enter a play? Both. So vast majority of the time I'm going to trade before the release to trade the release itself. I'm trying to trade volatility through there. And then after the release is generally when I'll trade things like continuations and stuff like that. So slightly different focus. And then for the same cycle, we have BABA, which looks not good. So pass on BABA for me. That is the wrong name. Deer. Also doesn't look good. JD does not look good. Take a look at Walmart. Doesn't look great. Man, this week is kind of light. Not a fan. Let's take a quick look at Walmart's track record. Implied is 3.4, actual is 4.3. Yeah, I'm kind of noticing that lately. So yeah, I mean, not a ton of trades for earnings, at least that'll go on tomorrow. Take a closer look, but not so much. Ross says SPY rally continues. I would expect it to consolidate personally. I'm actually surprised it's already gapped up quite this far. So it wouldn't surprise me to see consolidation. It would be very uncommon to see like a pure V up out. Like I just wouldn't expect to see that here. This kind of correction is very normal. I think this parabolic move has been kind of extended so far. So yeah, unsure, but it would not surprise me at all to see this roll over at all. I think that would be pretty favorable, like completely fine. I have to get ready to start moving all my stuff over to this handy dandy giant. Joey says might look into PED on HUT. Yeah, you can. The thing is you have to look at the way that the price moves, man, because one of the interesting things that I'm seeing so far is that price, it's not really moving. So one of the elements of PED is not just a big movement in terms of EPS expected versus realized, but also wow, this thing literally comes with like, this seems so excessive. Oh, you guys can't see. Hold on. This is hilarious. So here's the hard drive, right? It's kind of a chonk. It's pretty heavy actually. But it comes with this little power adapter, and it comes with, I just dropped a bunch of them. It comes with every converter that you could think of. Well, why do you need a giant bag of every other power conversion? It seems like most other appliances have a way to solve that a little more gracefully. But apparently these guys, they just send you everything and you just get it. I guess that's fine. But yeah, Joey, on Hut, you just got to be careful because you need the stock to move. PED isn't just when there's a big beat or miss. So yeah, there's a couple other traits. Anthony says Intel, something about us being at a 30-year anchor point today on another show. What kind of TA? I don't fucking know, man. That's not my kind of TA. I literally, there's some people that are really into like those super long-term charts and stuff. And I don't know why I just typed in TA. God, I'm so stupid sometimes. But yeah, to like go back 30 years. What was that, 371? Maybe like for an anchored VWAP? That could be. I mean, for me, what's way more topical on this really long-term chart is where support and resistance is. But yeah, I have no idea who said that, but I essentially, I mean, I've told you guys this before too. Funny enough, even though I am a producer of just financial news and stuff like that, like, you know, I trade myself, but I mean, I essentially don't consume anything. And it's just because I've never really found it useful personally. And I much prefer to have like a smaller information source. But the cool part about today is that there's so many different ways to trade markets and different insights on how different people trade markets that you can almost always find something that looks interesting to you or that aligns with you well. I think that that's really cool. But yeah, I mean, I essentially don't watch much of anything. Joey says, so could either be PED or maybe sell a put, credit spread expire Friday. Yeah, well, again, like the thing about HUD is that it's not moving, right? So even though it's after hours, normally when you report earnings like this, like the stock moves. So the fact that it's not really moving much post earnings, it's, unless it decides to like really activate tomorrow, to me, it looks like they probably issued some sort of guidance that then the market didn't care quite as much about the miss. Like that's again, my best guess based on what it's doing, but we'll see. All right, gang, time for me to hop off. I got to start transferring everything over into this bad boy. Great time catching up. Tomorrow is the Outlier Pro live stream. We're going to talk about some earnings. And then on Thursday, there's no live stream because you boys have physical therapy trying to get better. Friday, options trading for beginners. I forgot exactly what's on the agenda. It's on the stream itself. And then Saturday, GME live stream. Sunday, Outlier Pro market prep. We out here. We out here back in action, taking a look at markets. If you guys need anything, hit me up in the Discord. Be an outlier. See you guys later.